Thank you, Eloise, and thank you for inviting me onto this webinar. I'll be talking today about the evolution of the self-employed market and what an evolution that's been. 2023 presented a really turbulent backdrop to the UK economy, and I think that probably the less said about that, the better. Even arguably the back end of 2022, when we had the mini budget, which we'll also not talk about. But of course, the ongoing war in the Ukraine is casting that long shadow over supply chains and things like that, pushing energy prices higher. So there is a real impact on both consumers and businesses. And of course, we have the lingering effects of COVID as well in with that. So let's have a little look at that. I want to start and have a look at the market as it stands now, and then share with you some data that we have on Knowledge Bank with regards to the searches that we've found. It's quite an interesting picture, actually. So some companies' house data for you, just to start off with. This is the company's house data at the end, so they do it by financial year. So we're just shy of the new data being out in April this year, hopefully not long after when the financial year closes. So this is quite interesting. So when you look at these figures, that 5.51 million small businesses in the UK. Now that is including when we think about sole traders, small businesses as well. I mean, that we include in this. And when we're talking about the self-employed market, of course, we are talking largely about small businesses. A lot of your clients that you'll deal with will be small business owners, and of course, small business owners make up a huge percentage of not only the workforce but the employment. Small businesses actually account for 61% of employment, which is 16.3 million people, and that's just in the private sector. So it's huge. They collectively, I think it's well known that they are the biggest employers. So it's so important that we are able to, look after those clients, because they're collectively are the biggest employer in the private sector in the UK. So interesting to see these figures, but actually just a couple of other interesting stats as well. Over 35% of UK companies that are registered are within their first 4 years. And actually, coming on to my next slide, this will make this even clearer. So here you can see this is data from Companies House on the age of the companies in the UK. Now, as you can see, less than a year old and right up to 50-plus-year-old, really old companies that have just been around for a long time. So 35% of companies on this register under 4 years old. That's really, really significant, especially when you consider the stat that prevails is that 20% of companies will fail in their first 5 years. So that's quite a significant number. And of course, a challenge for mortgage lenders as well with regards to underwriting, because whilst they're looking to help, at the same time they also have to think about what happens if something does go wrong with that business. But yeah, it's a really interesting picture as we look at this. And actually, when I come onto our stats and show you what the search results look like and what that lending landscape looks like currently, you'll see how that does translate. The company's house data translates exactly to what we're seeing on Knowledge Bank. So 2023 has seen an increase in searches on Knowledge Bank across the board, right across the board. We were way over 1.5 million searches that we saw on Knowledge Bank last year. So it's a really good sample of data. And those searches come from people using the Knowledge Bank system, but also as well, we have the integrations that we have as well, with such as Iris and MMS, and those stats are also in there as well. So I mentioned that because it's a really large sample of data that we're able to give you to be able to look and see, okay, how is that looking? What does this lending landscape look like now? And where do the concentrations need to be? So Companies House, actually, interestingly, in 2023 reported higher numbers of new company registrations. So I'm talking about this, 1 to 4, or 4-year-old companies being the largest portion there at 35%, a significant chunk. And actually, Companies House saw 6.4 increase in company registrations, which from 2022 to 2023, which is really quite significant. So and just another stat, because we're all about the facts and figures today, 95% of the companies that are registered on Companies House are the private ownership companies, so not the big PLCs that we know of. So again, significant, and that's stats been quite stable actually over the last few years. But let's have a little look and see how our searches reflect this kind of information here on Knowledge Bank. Now, our criteria search data. I feel like I should have some top of the pops music on here, but let's go with a pie chart and keep that theme going. So self-employed 1 year's accounts tops our searches every single time. And if you think of the slide that we've just seen and the data around that 35%, that are, in their 1 to 4 year old period, you can understand why, because somebody is in that first couple of years, they've only necessarily got 1 year's account. So they've been trading a year, then they have the first year's account. So they do fall into that. So it's perhaps unsurprising that is the largest chunk of data that we have where we're seeing the number of searches that we do on self-employed 1 year's accounts. The next highest search in our self-employed criteria is the assessment of accounts for affordability. So this is interesting because this is, the affordability is everything, and we've seen that squeezed, in residential and buy-to-let. Affordability has been squeezed from both sides because, as rates have gone higher, that there is that impact on affordability, and lenders are trying to understand how best they can serve your clients. But the assessment of accounts of affordability is the second highest search that we see, and that's interesting because not all lenders do assess accounts in the same way for affordability, and you'll see some sort of subset of data that we have as well around, for limited companies, net profit for limited companies and things like that. And also things that you'll be looking out for as well, making sure that credit commitments for sole traders aren't duplicated on accounts as well as their own personal accounts. So for example, a loan to buy a van, for example, something like that. So that's really important, understanding how the lender is going to assess those accounts and how much then your client can borrow. The third actually is net profit in a limited company. So this is really interesting. So this is where, for tax purposes, owners of limited companies, directors of limited companies want to keep money in their business. So they're not necessarily spending it on their business, but they don't want to take it out because they don't need it to live on. But actually, it's there if they wanted it. So net profit in a limited company was the third highest search that we saw in the whole of last year. Just going down there, we've got trading history and years accounts. Again, that does go back to what we're looking for. If it's not 1 year, is it 1 year in a projection, or is it how are you assessing those accounts? And interestingly, one of the interesting pieces of data that we pulled out in terms of searches as well was understanding sole trader to limited company and limited company to sole trader. And it's always interesting every year to see which gets the most searches. And this time, sole trader to limited company did, but the margin was 0.02%. The interesting part about that is how many limited companies had then gone to a sole trader, and then those people were trying to get a mortgage. So really, really interesting. Again, we can speculate on reasons for that. We all know the reasons why people would go from being a sole trader to a limited company, because the company is growing and there are, maybe tax benefits that their accountant is suggesting that they take that route. But then from a limited company to a sole trader is the closest gap that we've seen in many, many years. And we could read into that, and possibly that that decline in business for people, that people are maybe letting staff go, as we saw last year. It was a really, I opened with the words turbulent, and I think that is really fair to say. So perhaps that's people that have had limited companies that have maybe scaled down. They're still doing the job themselves, but maybe not got staff like they had before. Again, we have things like umbrella companies. That is creeping up the charts. Umbrella companies are a really interesting one, and how people are working. We're seeing lots of people on a subcontractor basis as well. Really, really interesting to see that every year umbrella companies get a little bit higher up the charts. And what I will say as well is the data that I'll give you a summary of what we saw last year. But actually, interestingly, we're only a few months into 2024, but already we're seeing the same kind of trends. So it's interesting to see that what we saw last year is continuing. Now, of course, it'd be interesting to see where we end up at the end of 2024, and obviously we'll report on that at the end of the year and see if there has been a significant change. But it does look like we're going in the same direction. Perhaps encouragingly, a few more searches that we've seen in certain areas for self-employed. But still, self-employed 1 year's accounts is topping our charts there. Another interesting one as well, just to point out in there, is retained profit in the company. We talked about that, and also net profit in the company. So the retained profit and the net profit, quite often people wanting to look at using both. So we talked about that before, but where you're wanting to use the net profit and retain profit, and sometimes that can be a little bit of a challenge as well. But just ones that didn't quite make it on the charts, employed directors with the share in the business, that seemed to be a less of a search last year, which was interesting. That did decline in the number of searchers. So maybe that suggests that for limited companies, that what we have is fewer directors that are on those. So it doesn't matter so much about the percentages because there are fewer directors. I'll tell you the one that's interesting that actually did decline in our search data, and if I was a betting kind of lady, I might have had money on it, but accountants' projections. So that actually fell last year. So that might have been something that we were expecting to see increase as people were looking for accountants to ask if they can do projections to help with that affordability. But that actually decreased last year. Now, I suppose the flip side to that, and the negative to that, is that perhaps the projections aren't looking as positive for these businesses, and so that perhaps something that they didn't want to utilise. But again, it's interesting, all those 1.5 million searches that we've seen from brokers trying to place cases that tell the story of what's happening out there. And then one last thing that I will mention, another interesting point, again, quite low down, but it jumped up the charts a little bit of our criteria searches from last year. So this is not it is a self-employed customer, not exactly self-employed criteria, but this was capital raising for business purposes. So again, interesting, and maybe not unsurprising that increased in our searches. So last year we did see a significant increase. That it didn't make it into the sort of top 10 as it were, but interesting to see that increase. So maybe people wanting to put cash injection into their businesses, or possibly even pay tax bills with it. But that criteria, not something that every lender will do, but it is there to search to see who will facilitate that kind of lending, and a significant increase from the year before. So really, really interesting to see, how the lending landscape is looking, and also the data that we're seeing from what you're searching on Knowledge Bank, and coupling that with Companies House data and just business on, looking at small businesses, SMEs, and the data that's around that. And you do kind of see that trend. It was a difficult year last year, and that is going to be reflected in people's accounts this year. And of course, as we know with what happened with COVID, those accounts matter, and it's whether you're looking at getting those averaged, or will a lender that will take the most recent year, all things that you can search on, and that is something that we will be keeping a close eye on, because I think that'll be very, very telling as we go further into 2024, just to see and really understand what this is going to look like. So really good start to the year. We saw a really high number of searches in January. They did tail off a little bit into February, but then came back up again. But as we sort of ran into Easter, naturally, you get holiday times, they do tail off. But really interesting to see what happens after Easter on the self-employed searches and across the whole lot of data that we have. But hopefully that's given you some information, and just some useful information to understand what that landscape looks like and the evolution of the self-employed market. I think things to watch out for, and I think things that lenders are really being innovative on and really getting to grips with are things like the gig economy. So this is something we don't have a category for it because it's still self-employment, but I do think it's interesting the number of young people who are leaving school and now thinking, actually, do you know what, I don't want that 9 to 5. I want to go in and I want to do a little bit of a job there. I'm going to have an Etsy shop. I'm going to do get some money from social media channels, and this is really, really, really popular now, that people will have more than one source of income. And of course, a challenge for lenders, but I have to say, from what I've seen, lenders have done a marvellous job at rising to that challenge and understanding how that plays out. And even things that it would be interesting to see as well, the kinds of employment as well that people are going into. So I was recently reading an article that said that more and more younger people were going into jobs like shepherding, stonemasonry, that kind of thing, building dry stone walls. Those really what you would consider as older jobs, more traditional jobs. And the reason for that trend is that it's a 23% increase this year compared to previous years of young people going on training courses and entering those professions, and then being self-employed in those professions. And apparently that's all down to social media. So that's interesting because, of course, Instagram and TikTok are videos thinking, That looks interesting. I didn't even know that was a job. So I think it's going to be really, really interesting to see where this goes. And I do think the younger end of the market will absolutely drive this. And I think we will see some significant changes. And it's being ready for them that counts, both you know, for us in the industry as lenders and brokers, and just making sure that we're working together, that we're sharing that data, that we're feeding things back to lenders. You know, when you see BDMs, which is also, I know, great help to lenders on the things that you're seeing, because it's so important that that criteria is there for you when you really need it. So I hope that's been helpful. Hope it's been interesting. And Eloise, pass back to you.